So just I'm going to do a very brief introduction to Luca and his background. So I know, and the reason I'm saying this is because Luca and I are doing, for any of you that have heard of Clubhouse, Luca and I run a room on a Friday afternoon. We're not doing it this week, but we have done it for probably the last 4 or 5 weeks. We do an hour or 2 hours on crypto and all that entails on a Friday afternoon on Clubhouse. And I know that Luca studied economics. I know that Luca worked in a merchant bank in Italy for a short space of time. But I think probably more importantly for us within the entrepreneurial sector is that Luca and Katerina have been in business, in their own business, for more than 2 decades, and you know, and successful at that. And also know they're property investors as well as running their other plants business, so running multiple businesses. And I know from the Clubhouse rooms that I've been running with Luca that he has phenomenal knowledge and interest within the crypto space and the blockchain space. Yeah, and I know I've listened and sat and learned. So please, I'm going to hand over to Luca, but if you have any questions at the end of this, I know Peter's going to contribute as well. I mean, I do mine crypto, and I am just about to invest in crypto when I organise myself to actually do it. I've set everything up. I've just now got to buy the coins that I'm going to invest in. If you've got any questions, please ask Luca at the end. So I'm going to hand over to you, Luca. It's 7:30. We do finish at 9 o'clock. So over to you for your presentation.
Thank you very much, Julie. And let me just introduce myself first before I go into the presentation. First of all, I just want to say that I am really excited about tonight, generally, because it's kind of like, for me, crypto ticks all the boxes. And I've got my 3 top values are freedom, learning, and growth. And I have to do these on a constant basis every day when I'm involved in crypto. So that's why I'm quite happy to, you know, to educate and talk to anybody that wants to talk about it, because I do like talking. So I'm going to try to be as brief as I can tonight, because I know that there is a variety of skill and knowledge of the sector, even between all of you that are listening. Some people are complete beginners, some people are already experienced a little bit. So I'm going to try and put the subject in context and make you understand the main concepts behind it. And then probably the most interesting part will be when we get to the question and answer session. At least I can answer the questions that are relevant to each one of you, so that we can because it's such a vast subject that it's impossible to cover it all in such a small space of time. But I'll definitely do my best. As Julie said, we ran. I was actually in London. I was in banking. I was working in Cannon Street, Italian bank, for a while. And then we started our own business with my wife, which we have been running since 1995. So it's a long time. It's a long time. What happened last year with the pandemic, you know, as similar to all of you, changed slightly. So kind of like our business is pretty much ground to a halt. I mean, it carried on ticking over, but pretty much ground to a halt. What I decided to do, because I've been already studying and investing in cryptos, I've got a mining rig as well, since 2017. And using the extra time on my hand, obviously, because of the pandemic, I actually pivoted and decided to actually make it a main business, a main occupation, with, I must say, astounding results. So the next step, after I've been trying to help people on a one-to-one basis, kind of run out of timing slots to help people that way. So I had to create a kind of like a micro school where I can lead people through all the steps of investing in cryptocurrency. But without further ado, let me go into the presentation. I'll start sharing my screen, and I can tell you a little bit more about the old sector. Let me share. Okay, can you all see the screen? Can you all hear me properly before I carry on? Just give me a thumbs up.
Yes.
Yeah, perfect. Okay, cryptocurrencies take their name from cryptography, which is not a new thing. It's been around for thousands of years, and it was used mainly for secure communication in times of war. You know, if you can imagine, 2,000, 3,000 years ago, messages were being delivered by hand, and the people were always worried about being intercepted. So they had to develop cryptography so that only the person that received the message would be able to decipher and understand the content. Let's see how, going to the modern day, don't worry, I'm not going to talk about the whole 3,000 years of history, just to give you a brief idea. I've done a brief index of what we're going to talk about tonight. First of all, we're going to talk about the context into which the first blockchain, known as Bitcoin, was created. Why are cryptos important for us? Then we're going to describe how a blockchain works and how Bitcoin works, Ethereum and the birth of decentralized applications, different types of coins that are available, altcoins and tokens and what they are. Then I'm going to talk briefly about wallets, exchanges, and storage of your coins once you have purchased them. And then a few use cases, and then we go into a Q&A. Peter will also speak about his experience in dealing with cryptos and investing in cryptos as part of his investment strategy as well. So it's 7:30, 7:35 now. So I'll keep an eye on the time, but if I get too slow, or if you feel yourself feeling asleep, then give me a wave and let me know so I can speed up or slow down or whatever. If I'm going too fast, then just unmute yourself and tell me or ask me a question if you want. If it's not really necessary, then keep your questions until the end, as this way we can get through the presentation more quickly and get to the part of the questions later. Okay, these are some of the news that were flying around after the previous bull run of 2017, 2018. Read them for yourself, but some of them are quite funny actually. So is Bitcoin probably worth zero? Warren Buffett says Bitcoin is probably rat poison squared. The great Bitcoin scam. Bitcoin is a bubble and a perfect example of faddish, whatever. So they're all cascading quite aggressive headlines. And just to make you understand how the people that we listen to and give us advice and what they were thinking about, how they were describing this a few years ago, how they are describing it now. Sorry, let me just. Okay. So this is what some of the main investment banks were saying in 2017 and what they say now. Let's say, for example, a Morgan Stanley say Bitcoin's real value could be zero, and this was 3 years ago. Now Morgan Stanley becomes the first big US bank to offer its wealthy clients access to Bitcoin funds. It's a JP Morgan, the boss of JP Morgan. Bitcoin is a fraud that will blow up. Where now, JP Morgan says investors could make Bitcoin 1% of their portfolio, so it's part of their investment strategy. Goldman Sachs, another investment bank, is 5 reasons why Bitcoin is not an asset class nor a suitable investment. Exclusive, Goldman Sachs restarts cryptocurrency desk amid Bitcoin book. Bitcoin is useless as a payment mechanism and ridiculous as a store of value. This is the ex-PayPal CEO. And then this year, one of the big news of the past few weeks is that PayPal is actually allowing all their users to pay in crypto. So PayPal's entry to crypto followed the long build-up in expertise. Then the last is the Visa CEO We won't process transactions in Bitcoin because it's not a payment system. So Visa is now working to enable Bitcoin purchases. So you see how even these are the people that we listen to, are they changing their mind because it's a wave and they cannot stop. So it's either join it or disappear, or lose significance. Move on. A little question to some of you. Put the answers if you want in the chat box. Now, can you see what all these things have in common? Banks, gaming consoles, betting shops, insurance brokers, YouTube, Spotify, social medias, internet browsers, art galleries, Amazon Marketplace, the land registry, and the DVLA, and Google Ads. Anybody has any? I can get. Where is the chat box? Let's have a look. I can get the chat box. Oh, there's somebody who's trying to get in. Excuse me for a second. There is a kind of like I need to stop the share for a second. Just give me. You have two people in the waiting room that I am admitting. Okay, let me just check. Okay, should all be done now. We're all in, and welcome, Rosalind. So I'll go back into.
Thanks. Sorry.
Okay, so let's have a look at some answers. Established businesses, they deal in money, they're all starting to accept crypto, require internet to survive, and they're online. Okay, some of them are online, some of them are not. But what they have in common is that all centralized intermediaries. So we need them to get access to the goods or services that we want. For example, we need to have a bank accounts to pay our bills, to get access to our money. We need to have gaming consoles to play games on television, on the internet. If we want to put a bet, we need a betting shop, or we need a betting app, which is the same thing, just online. Insurance brokers, again, they're intermediary. YouTube as well. YouTube doesn't do anything. It just lets us access and lets us watch video. Or like Spotify is the same for music. Social medias put us in touch with each other. So all these things, even the language and DVLA, there are things that can be done using this technology. So, where is it not going? Okay, they can all be replaced by decentralized applications. And we'll see what that means in a minute. Decentralized applications belong to the users. So there isn't a central figure. It says you are right, you are wrong, this is your account, this is correct, this is not correct. We're all together democratically create a system, and that system deals with everything that the users may want to do on it. So it's so to sum it up is like profits to the many rather than the few. And this is why it's so important, why I see the sector that is booming so much, because we've been talking here in the UK about giving power to the people ever since we did the Brexit referendum. But this is the real power to the people, because a lot of these intermediaries take a big chunk of things that could instead be redistributed between the users. And I mean, some of the biggest user cases in cryptocurrencies are the decentralized finance. So they could potentially replace the banks. There are games online that the users are creating and maintaining. There are apps that are replacing YouTube and Spotify and so on. So all these things are already available, and it's only a small window on the use cases of this technology. Now we are at a very special moment in history. This is probably the only way to frame it would be what it was like at the beginning, when, beginning of the PC and then the beginning of the internet era. So nobody had to use it when it first came out, but after a few years, it became necessary. Now there are many services that you cannot access unless you are on the internet. And this is similar. At the moment, we are still very early in the decentralized era, but in a few years' time, this is going to be the way that all things are done. So we can either learn how to use it now and how to profit from being, let's say, early adopters of this technology, or we're going to have to learn it anyway in a few years' time, because this is the way that things are done, as we had to learn to use the computer, as we had to learn to use the internet. So let's put this in a little bit of context. I'm not seeing anybody that would like to see a few faces. Okay, so let's put Bitcoin into context, and this is kind of like a Bitcoin and blockchain, which is the technology behind it, came about at the end of 2008, beginning of 2009. Now, I would like to talk for a few minutes about the context in which this comes up. And there are certain forces that had a strong input into the birth of Bitcoin. To begin with, probably the strongest influence was the monetary policy, and we're going to talk about it a little bit more at length in a second. Computational power and the increase in computational power that was becoming available, blockchain, Bitcoin wouldn't have been possible a number of years earlier than it did, because simply there wasn't computational power to support it. Also, there was a growing demand for decentralization and a kind of a shift from competition to cooperation. And then there was a growing distrust of institutions. This because this started to come about. You remember what happened in 2008? We had the subprime mortgage crisis and the bank bailouts. So many people were really angry about this, and especially how the government handled the situation. Didn't agree that all public money, so much of the public money went to bail out the banks, and this is kind of like the context in which the things that were being talked about when Bitcoin came about. So in 2008, this person called Satoshi Nakamoto published this white paper, which was entitled Bitcoin, a peer-to-peer electronic cash system. By the way, a white paper is just a fancy name to describe a PDF file outlining the use cases, what is being proposed, and the method to achieve it. And the first line of the summary is a purely peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution. Okay, and this is in a nutshell. Obviously, it goes then to a lot more detail. You can find it yourself if you Google Bitcoin white paper. You can read all of it, including the mathematical proof that's included in that. This is just the first line. And this is the main bit of it, when it says payments to be sent directly from one party to another without going to a financial institution. Okay, because what you got to understand as well is that financial institutions are part of the system that tax us in ways that we don't even realize. So the introduction of the boom and bust cycles and inflation are a way of siphoning money away from the public to go into the coffers of the government and the banks there running the system. So it all started in 1971. So we're going back quite a few years. If we, this is something that keeps repeating in history. We could start at the Egyptians, the Greeks, and so on, but we don't have the time for that. Although I love talking about economic history. I want to talk briefly about the gold standard. Okay, this is when up to 1971, every dollar or pound or other currency that was put into circulation was backed by physical gold in the vault of the central bank. And if you can see, this is an old $20 note. If you can read here at the bottom, it says $20 in gold coin payable to the bearer on demand. So you could, in 1950, 1960, you could present this to your local bank and be given in exchange gold coins. Okay, what happened in 1971? So money, let's say, back the gold deposit. Basically, the cash was a certificate of deposit. It represented the gold that was deposited in the vaults of the central banks, and it made it easier to transact because obviously it's not quite as easy to carry large amounts of gold around. So the two of the qualities of the gold standard is the government obviously can't print money, as it's doing so well today. And for me and you, for what meant for our parents and our grandparents is that there was very little credit available, and generally they had to save before they bought anything. Okay, there was nothing of this easy credit and buy whatever you want and pay later. In 1971, President Nixon ended the convertibility of dollars to gold at fixed rate. Okay, so all other countries in the world follow suit pretty much at the same time. And so that meant the end of the gold standard and the birth of what they called fiat currencies. Now, fiat comes from the Latin that means literally let it be done. And this is the way that literally money is created now. So it is created out of thin air. And this is a picture, I just want to put this in, of money, because at the end of the day, what we need to realize is that throughout history, we always used precious metals to trade because they had an intrinsic value and their scarcity. But the moment that this link was broken, money becomes something else. It becomes a currency. It becomes a social norm, because there is no intrinsic value in a piece of paper, apart from a very little value on the physical paper that was used to make it. It only has value because we know that if we receive it from somebody, we can then spend it with somebody else buying what we want. Now, these are currencies, not money. Can some of you guess what is missing from the property of money in the money of today? Feel free to Feel free to unmute yourself, see if you want, or put something in the chat.
What's the question, Luca?
Can you see what is missing after 1971? What is missing? One main quality of money. So from the currency that we're using today and that we've been using since 1971, they took something from us. Well, what was that?
Yeah,
Anybody?
The base metals, or the metals that connected the currency to something underlying value. There's no underlying value. It's just there's only a paper indication, a symbol of something valuable.
Yeah, that is correct. Point about what is the quality of money. Money has got three main uses. Okay, it can be used as a medium of exchange, can be used as a store of value, and as a unit of account. Okay, it's still a unit of account, it's still a medium of exchange. What is missing, and this is why we're talking about currencies and not money, because money, one of the main qualities is that it stores its value throughout time. So if we put, when money was connected to gold, on the gold standard, we could put banknotes in the mattress, take them out 10 years later, and we'll be able to buy the same things with the money we had available, because it was backed by a certain amount of gold, and there is very little inflation in a gold standard. With money now, can you say that you could buy the same things with the money today. You'll be able to buy the same thing in 5 years' time.
Nope.
No, I mean, we all have, a lot of us own our own house. How much did we pay for it? How much is it worth now? And it's still the same bricks, and it's still the same in the same place. Why is it worth like 10 times as much? Because basically, what the money that is in your wallet is degrading all the time. So it is losing value. It has lost that property as a store of value. And one of the other things of creating fiat currencies is that the government now can literally print money and create money out of thin air, and can use the money supply, if used well, to manage the economy. Now, unfortunately, a lot of the politicians are short-term politicians and only look at the short term and not at the long term. So often the money supply gets misused by central banks on the pressure from the government. So credit is a lot more widely available, and as part of this system, inflation, boom and bust cycles are actually built into the system, so they are meant to happen. Okay, and what it means, the system itself rewards your present self against your future self. Because if you think about each time you have a medium of exchange in your hand, whether this is money, gold, or whatever it is, and you make the decision: do I spend it now or do I keep it? You are making a choice. You are to either reward your present day self, or you think, I will keep it because I want my future self to be better off, to have more power of buying power. Now, obviously, in this system, because the money in your pocket is devaluing all the time, you are encouraged to spend it and to put it to good use. So again, you're encouraged by the system to consume as opposed to save. And this is, at the end, it's not the buy now, pay later kind of mentality. So that nobody now thinks about, that they're going to have to pay for something later. They just want it now, and then they worry about paying it at a later date. So this culminated in 2008 when there was a quantitative easing. And this is significant, and not because I like to use these big words, simply because in the Bitcoin first block, and I'll explain what that is in a second, there is actually a picture of the times of 2008 when Gordon Brown actually was talking about quantitative easing, introducing a new way of quantitative easing. So there's lots of money that was printed, and this money was going where people didn't want it to go. Okay, so let's talk now about blockchain. Okay, because this is the technology that allows all the cryptocurrencies to function. And although it's a name that many of you have heard, I'm not quite sure how many of you understand exactly what it is. But it's not very exciting when you describe what it is. It's simply a digital record of transactions. Okay, a special digital record of transaction, but still. Sorry, somebody is saying something? No, okay. A digital record of transactions. So imagine, if I can explain what a blockchain is, this is a ledger. Okay, imagine that you have an accounting book, a ledger like that, and you write transactions page after page after page after page. When the book is full, you close it and you then start a new book, and you do exactly the same thing, and you fill page after page after page. And again, when you finish that book, then you start another one. And all these books are connected to each other, okay? And so they form there's only 3 examples here, but they form a chain that is thousands and thousands, hundreds of thousands long, okay? This chain has a certain property. So, for example, it's immutable. Well, once the transactions have been confirmed and they've been written into the blockchain, you cannot change them. It uses decentralized technology. So it means that it exists and is maintained. It's maintained by the network of users. And there isn't any central authority that governs the network. is secure. It cannot be corrupted. It uses distributed ledgers. So this is the big change and the revolutionary introduction is that normally, let's say, an accountant will write the accounting book and then keep the book in a central location. Now, in this case, in the case of blockchain, copy of the ledgers are held by all the validators. Okay, so they're not just one person that holds the records, and so when the power is in the hands of one person, it could easily be changed, it could be corrupted, etc., etc. But the same records are held by thousands of different computers at the same time. Okay, so and each computer has a complete list of the records from where the certain blockchain started to the present day. So even now, you could go into Bitcoin and check the first block that was ever written into the blockchain. It's democratic. Again, it's difficult to understand the concept. I'm sorry that if I am repeating myself, but I just want to make it easy to understand that there is nobody in charge. Okay, so the only way that things are done in blockchain is by having the consensus of at least 51% of the votes. And also is transparent. So we can all go and read every single block that is written and all the transactions that are in there. And we can see where they're coming from and where they're gone. Okay, oops, sorry. Now, we can talk about Bitcoin. Bitcoin is a type of blockchain, okay? But, and it's the first use that we had of that technology. What we talked about, there was a peer-to-peer version of electronic cash to allow payments without going to a financial institution. Now, some of the qualities of Bitcoin is that it has a maximum supply of 21 million hard-coded in the software. So, and this is important. You know what we were talking about before, about saying that people were annoyed with the government just printing money and just giving it to the banks and bailing them out. In this case, Bitcoins cannot be brought into existence from thin air. There is a certain way that is decided by the protocol and it's been hard-coded into the software, so there will only ever be 21 million Bitcoin and not one more. Okay, miners are needed, people that put their computer at work to support the system, and they do this by solving complex mathematical puzzles. And the miners basically help keep the system alive, and as a reward, they are paid with Bitcoin. And this is the only way that Bitcoin come into existence. So the miners get paid whenever they write a block into the blockchain. They get rewarded by a certain amount of Bitcoin plus all the transaction fees that have been attached to all the transactions. Now, if you see the next line, it says diminishing inflation. Okay, when Bitcoin was first came into being in 2009, the reward for to solving one puzzle, basically, and completing one block was 50 Bitcoin. Every 4 years, the reward gets halved. Okay, so after 4 years, that reward from 50 became 25, and then from 25, 12 and a half, and now the last halving that was last year in May went from 12 and a half to 6.25. Now, there's nowhere in the Bitcoin code that talks about 21 million, but if you keep halving the rewards every 4 years, you get to a point in 2140 where the reward for mining Bitcoin would be so small, it would be insignificant. Okay, so the next thing about Bitcoin is anonymous. You can see the addresses where the coins are coming and where they're going, but then you cannot see what they belong to. And as before, is transparent and decentralized. Okay? These are the main qualities of Bitcoin. Now, if you want, we can talk about details more in depth later in the questions, but I just wanted to give you a rough understanding of how the system works more than bog you down with all the technicalities, which not be that interesting. Okay, let's talk about the success and failure of Bitcoin. As a success, I would say, first of all, it's a huge success as a store of value. As people understand that nobody can create new Bitcoins and not in the way that is being agreed by the system, it means people are starting to value it more. And it's had a history of growth of about 215% per year, as a compound growth of 250% per year, which is unprecedented for any asset class, any other asset class it's available to invest in. In only 12 years, it's reached 1 trillion market cap. Market cap is basically just multiplying how many Bitcoins are in circulation by the value of 1 Bitcoin. And it's amazing that in 12 years, we've gone from 0 to 1 trillion. And if you think of the whole crypto sector, so including all the other coins, we are, this past couple of days, we actually reached 2 trillions. And the whole sector, Bitcoin and all the other cryptos, were only 500 million just before Christmas. So the whole sector has grown fourfold in 3 months. It's seen success is becoming accepted as an asset class by institutional investors, and is seen as a competitor to gold, and like a digital version of gold. It has, obviously not the physical properties, but it has got the similar properties from the point of view of an investor. The reason why an investor might want to hold it in their portfolio. Excuse me. The failure of Bitcoin is mainly as a medium of exchange. Is far too slow for day-to-day transactions, and it's too expensive. Although it's cheaper when we're doing large transactions from country to country. And this is the kind of one of the problems with Bitcoin is like one transaction may cost $7, $8. Obviously, you wouldn't buy a coffee for, $2 or £3 and then having to pay twice as much in transaction fees. There are ways they are trying to make the system faster and cheaper, but anything with Bitcoin is slow because it's very difficult to get consensus from 51% of the votes. So basically the network is forever talking about things and doing very little. But in a way, this has been the success of Bitcoin as well, because it's very limited in what it can do. So it can only do one thing. It's easy to understand, and it's easy for people that are outside of the crypto world to get it and to understand why it could be a good idea to have Bitcoin. Now, what happened actually? Let's go back one step. In the first few years, Bitcoin was from 2009, from when it was created, and in the first few years, it was kind of like the playground of the mathematicians that literally were talking between themselves and trying to write code and prove that the system worked. And it wasn't until they actually said, actually, this thing worked. Can we see if we can do something else on it? And because of the programming language that's used for Bitcoin is very limited, very limited number of things that you can do with it. Some people got together and created called Ethereum. Ethereum is another blockchain, and has become the second largest blockchain after Bitcoin. Now, why was Ethereum created, and what it allows you to do that Bitcoin doesn't do? The main feature that was introduced was that it allows to store executable computer code in the blockchain. And this is, again, is revolutionary because it means that it becomes, in a way, it becomes the world's computer. So it becomes a programmable base layer on top of which programmers can then program decentralized apps and smart contracts. Right? Smart contracts are just a set of instructions, a set of code is a series of if-then. So if this happens, then this will happen. The thing is that it has the property of a blockchain. So it is immutable. Once you have set a certain number of instructions and you funded a transaction, then the transaction will happen when those conditions are met, without any third-party involvement. Imagine, just give you a simple example. They I like to use all the time. You fly, you have a long-haul flight, and you get insurance to get the money back on your flight if your flight is delayed by more than 12 hours, let's say. Okay, you can put that in a smart contract. So there is the money for the premium that goes in there, and then the insurance company funds the contract with the money they will pay to you if there was a delay. So the moment that that plane is 12 hours and 1 minute late, you would have the money in your account. And this is a difference between that and having to call the insurance company, having to argue with them. They're asking you, like a kind of paperwork to try and get out of paying your claim. This reduces the need for a central authority, the same way that Bitcoin reduces the need of having a financial company behind your transactions. So this really is the start. Ethereum was the start of the decentralized world. Yes, it was made possible by Bitcoin, but the invention of Ethereum was probably even bigger than the Bitcoin. So it allows decentralized application called apps to be created on top of the blockchain, the same way that we all have a telephone. So if you have an Apple phone, Apple provides the operating system, and then people that want to write apps for it just write using that operating system. The same way, here, people that have they want to create apps just use the Ethereum operating system and what is called an Ethereum virtual machine, and they can create their application that live on top of the Ethereum. This application can be many different things. They even represent their own blockchain, and they can be cryptocurrencies or other things, all using a particularly common standard is offered by Ethereum. Now, the value of Ethereum, different from Bitcoin, is that in part derived from the success of the applications that run on it. So Ether is the currency of Ethereum or blockchain. There is no cap. So there isn't a hard cap in Bitcoin. It could be more than a certain number of Ethereum, but there is now a new feature that's being introduced that will make Ethereum stationary or deflationary. So they will start burning coins at regular intervals, and the coins that are burnt are less than the coins that are being the new coins that are being created. So it will become more valuable over time. The biggest use case of Ethereum is decentralized finance. So, which again, there are financial applications like banking, like lending and borrowing, possible without a central figure. Keep repeating that. I never get tired of that. It's just difficult to get your head around it. In crypto, you have to take responsibility. You are in charge of your own finances. There is no customer service. There is nobody behind it. So you have to make sure that what you do is all correct, but there are good nice rewards at the end of it. Okay, talk about network traffic and altcoins. Okay, already Ethereum was born in 2015. Already by 2017, both the Bitcoin and Ethereum network were showing signs of strain. So they were all like congested. They could only process a certain number of transactions, which is even now is about 7 on the Bitcoin standard per second, and about 15 on the Ethereum network. So what that caused was like slow transaction speed and high fees for using these two networks were producing a real bottleneck, because there were people that wanted to do lots of different things, but the cost was prohibitive. So, if you use that as a background, you can imagine now all these new projects that emerge to to alleviate the issues faced by these reduced-to blockchains, because obviously you don't realize that there is a problem until something is created, and then the new generation of projects that comes along is better than the previous one because they have the knowledge of the previous projects. So projects like EOS, Cosmos, Cardano, Polkadot, Tron, Binance Smart Chain are just a few of the examples of blockchains that were created to offer better solutions to the end user, and of course to gain market share from Ethereum. When you say better solutions to the end user, we're talking about faster transaction time and cheaper to execute. So many new coins use what is called a proof of stake validation system, as opposed to Bitcoin and Ethereum. They use the proof of work. Now, the biggest difference is that the proof of work system that Bitcoin uses a lot of energy. And it's being calculated that the energy that is necessary to just run the Bitcoin system is more than a couple of small countries like Belgium uses every day. And also, though, introducing proof of stake, which is a completely different system that uses very, very little energy, creates a new use case, because it means that staking means that people, what's that? Oh, sorry. Staking means that people can deposit their coins and get some rewards in the form of, say, interest. Let's call it interest for depositing their stakes and keep the network working. So people can not just buy the coins for capital growth, but also for ongoing income. So where are we now is that the development of many of these projects, they started sometimes in 2015, like in Cardano's example, and 2016, 17, is coming into fruition now. I know as we speak, some of the bigger projects are finishing putting the foundations in place to be fully functioning and have a full functionality. This is going to be massive the moment that Cardano and Polkadot are fully deployed, and you can see this strain at the moment because Bitcoin and Ethereum are still training, and there are other systems that are benefiting as a result, because people still want to have apps that work and still want to get new customers and still want to use it as much as they can. So there are systems like, for example, the Binance Smart Chain, like Tron. They are working really well at the moment because are getting frustrated customers from Ethereum. Okay, so let's move on from this. Let's talk about stable coins and NFTs. Now, first of all, stable coins. Cryptocurrencies are difficult to use in day-to-day transactions because they are very, very volatile. So stable coins were created to basically form a bridge between the crypto ecosystem and the real world. So a stable coin basically represents a digital version of the asset that it represents. So this, for example, Tether is like a digital dollar, or there are digital version of gold or pound or Swiss franc or whatever. So the reason to form them is that people can use them for payment, and it's much easier to say what the price is in dollars rather than say what the price is in Bitcoin, where it can change by 10% in a matter of seconds. He allowed people to use cryptos for payment without leaving the crypto ecosystem, without having to change their cryptos for pounds, dollars, or the local currency. Another type of coin that at the moment is booming and is being talked about on the news every day is non-fungible tokens. Now, could one of you give me an example of, probably you've heard about what non-fungible token is, but can you give me an example of what a fungible token is? Let me see some in the chat. One Bitcoin.
Hello.
Yeah,
Hello.
Yes, carry on.
All money created by governments and fiat money is actually fungible.
Exactly.
Yeah.
Very good, very good. So we all use fungible tokens, which are money, coins, notes, etc. Because basically is that the £10 in my pocket are worth exactly the same as the £10 in your pocket. That's the easiest way of describing it. So we can exchange the two tokens, the two £10 notes, and it doesn't really matter which one we have because they are the same. They got the same use. In the case of non-fungible tokens, instead, they are digital unique units, okay? And they can represent many difficult things, and many different uses are being found every day. The main uses that we've found so far are kind of like digital art, collectibles, like, for example, collectible cards, physical assets. For example, properties can be placed in and transacted as an NFT, for example. Because basically, it's just like putting an address, like a web address, on a physical thing or on a unique digital thing. And there are many more hybrid uses that are thought about every day. But the main use cases at the moment are in the art and music world, and collectibles and gaming. Gaming probably is what is going to make NFTs explode in use, because it means that people can play the games and they can buy things as part of the game and keep them, actually own them. For example, I don't know, you're playing Minecraft and you found this really nice sword. You can keep this sword. If you want, you can sell it to another player, and it's got a value throughout the game that you can transact. And for the art and music world, also is a game changer, because first of all, it means that the artists and musicians can go directly to the consumer, but also it means that the artists retain control of how much resale royalty they receive if their pieces have been resold to another user. So, for example, a picture. Say an artist will sell a picture and that is it. Whatever is got for it, it is whatever is got for it. Even if then that picture gets resold for millions of pounds, the artist wouldn't see any of it. In this case, with the NFTs, the artist can specify, let's say, I want 20% of the resale value of this artwork in the future, and every time it gets sold again, it gets a chunk of that sale price. So it can be a real change, game changer for artists and musicians. Okay, where are we now? I would say that if we think about, we look at the adoption curve, a product adoption curve. When we have the innovators at the beginning, then you have early adopters. So we're talking about from tech enthusiasts at the beginning, like programmers, mathematicians, and so on. Then you have the visionaries, people that can see this technology and they get excited about what it can achieve in the future. Then it becomes we're going into the early majority, where everybody starts using it and it's something that becomes part of our daily routine. And then you go all the conservatives, they only want to make sure that something works well before they spend their time and understand how to use it. And then you get the laggards at the end, you got the skeptics. People think, oh, this is just a scam, will never work, etc., etc. I believe we are at this stage here. There are, at the moment, roughly between 1% and 2% of the world population that is using crypto. Keep one thing very, very clear in mind, is that it took 12 years to go from 0 to 100 million users. It may be that we go from 100 million to 1 billion each year. We have already, there's one of the projects I was talking about, and it's very close to my heart, is Cardano. And they are actually had some deals with African states to provide identity services, banking to people that have got nothing. At the moment, there are about 2 billion people in Africa, Asia, Eastern Europe that don't have access to a bank account. They can't even have any identity documents because they can't prove who they are. And Cardano will provide that and will bring hundreds of millions of users they are not there because it's a shiny new thing or they can make some money by investing in crypto, but it's because it is going to help them in their life. They will be able to have a bank account. They will be able to make payments, to give and receive loans, to get insurance, to do all the things that we take for granted and they don't have access to. So this is a real game changer. The real change, I think, that could break down barriers and give like equality of opportunity to to everybody across the world. So really keep an eye on that space, because it could be the biggest change that happens this year. The first agreement with Ethiopia should be announced in a matter of days, and others will follow suit. So it might be the new developments in crypto are created and are pushed by these big mass of people, as opposed to people and investors from the West. Okay, these are also the product life cycle. As you can see, we got the introduction, then we got a phase of growth, then we got a maturity phase, which can change if we introduce new uses of this technology, and then we're going to have a decline. This is the way that each product, the life cycle of each product. Now, again, where I believe we are at the moment, I believe that we are at this stage. We are started growing, and obviously the growth has been kind of a breathtaking recently. We've grown about, as I said before, the old sector about 4 times in the past 3 months. But there is a lot of growth to come yet, because we are just now finishing the blocks, basically, for the infrastructure that will support the millions and millions of users that are coming on board. It's still at the moment quite sometimes complicated, quite tricky to use some of these apps and some of these technologies. But all the time, with the increasing numbers, we're getting better interfaces and easier to use. And soon you'll be using these things, and you find it no different from using apps on your phone. And at the same time, it can be decentralized apps that are working on the blockchain. So very quickly now, I'll just rush through this: how to buy, stake, and store cryptos. And it's a very similar process that we already used to, pretty much. Kind of like, we open an account with the cryptocurrency exchange, the same way that you would do if you were buying shares and you open an account with the broker. Whether it is, obviously, it would have to be online. Then once you have opened the account, and this is the same procedure that you use for your local bank. So you have to produce documents, or your passport, or your driving license, proof of address, etc., etc. Once you've done all of that, you can then fund your account, so transfer funds on it. With the funds, you can purchase cryptocurrencies, and it could be either directly, if there's some of the main ones, the bigger ones, you can buy directly with dollars or pounds. But with most of the smaller ones, you will need to buy either Bitcoin first or a stable coin, like Tether I was talking about before, and then use that currency to buy the smaller coins. Now, at the moment, I just keep it simple to the cryptocurrency exchange. There are central exchanges, which is the ones that I'm talking about, and there are decentralized ones. But decentralized ones are a lot more complicated to use for our beginners. Once you've got familiar with the way the cryptocurrency exchanges work, and you can venture out into the decentralized exchanges. So once you got your coins on the cryptocurrency exchange, you can either stake them on the exchange in exchange for a percentage, like an interest, or you can withdraw your cryptocurrencies to your wallet. Now, the wallet can be, put your feet up, yes, when you finish. The wallet can be hot or cold. Okay, and I'll explain in the next slide. So staking allows you to get a percentage return in exchange of locking your coins for a specified period of time to support the network. And it is, for things that you probably know, it's a bit like fixed term deposit in a bank, when you agree to deposit in your savings account for a month, and in exchange you get some money, some interest. When you stake through an exchange, though, your coins have to stay on the exchange. The reason why it's important to move your coins from an exchange to a wallet is that the exchange is a company and they have control of your money. And it's not like in the bank where you have a guarantee. You know, they're up to £85,000. They're guaranteed of the money that you got in your current account. There is no guarantee with cryptocurrency. So if they disappear from, the cryptocurrencies exchange, they're gone forever. And there have been cases of hacking into cryptocurrency exchanges. So it's important to use them and then move stuff out. And the way that you can move it out, you can either, there are three types of exchanges. One is the exchange wallet, which is least secure because you are basically giving your coin to somebody else to look after. Or you can have a hot wallet, which is basically a piece of software that's sitting on your computer. And the software is, excuse me, it's only as good as your internet security, because obviously if you download some virus on your computer, you might end up infecting your wallet and losing all your coins. And the other way, probably the most secure, is the cold wallet, which is hardware wallet, which is like a USB stick that you connect to your computer when you want to move coins in and out of it, but the rest of the time is detached from the computer, so nobody can get to it. And if you were to lose it, you can restore the coins that you had on that physical part on another unit, so it won't be lost forever. Okay, before we go on to the Q&A, I think I've spoken for long enough. I'm not quite sure what time is it, but yeah, it's 8:30, so actually I'm quite on time, maybe about 5 minutes late. And I would like to introduce you to Tattersall, as Peter has a good experience as well of investing in Bitcoin through his Retire Richer Club. So Peter, if I could give you the microphone, could you just, in 5 minutes, if you could you tell us about your experience with Bitcoin and investing
Sure.
as part of the club?
Yeah, well, very, very quickly, my journey began when the previous leader of the London City Circle, our very own Gloria Austin, invited a company to bring their cryptocurrency mining rigs down to Covent Garden and stick them on the bar. And there it was whirring away while Josh gave his presentation. So I started mining cryptocurrency for a couple of years before I was being paid in coins, not Bitcoin. So I kind of had one foot in the door really, but I guess what changed was around last September, I was mentored by a multimillionaire investor and trader. So I'd done really well with my pension and fiat currencies. But he started talking about being far more bullish on Bitcoin. And I think because I started to search on YouTube, YouTube started to feed me kind of more videos. And I came across this video and it had the headline, "The $425 million Bitcoin bet." And I thought, bloody hell, what the hell's this? And it was a guy called Michael Saylor, who is the CEO of a software company called MicroStrategy. And what he'd done, he'd put $200 million of his own money into Bitcoin. But this is the really impressive bit. He persuaded his company board and investors and staff to put $2.5 million of their treasury's reserve into Bitcoin. So when I started listening to him and his videos, so I really recommend you have a listen to those. His name's Michael Saylor, S-A-Y-L-O-R. Fabulous videos. He explains it really, really well. So I decided from that point to put 10% of my total investing pot into Bitcoin, I actually ended up putting almost 12% in. And I started doing that last November. And then I was kind of on catch up, and I was liquidating as much money as I could. So I sold the whole of one of my ISAs and put that in, sold half of another one. I put all my salary for the year that I withdrew from my company, put that straight in. And I'm so glad that I did, because, you know, I was kind of telling my club members, I was jumping up and down, kind of saying, oh, my account's worth $100,000, you know, $100,000. Bloody hell, you know, not long after that, it went to $200,000. And I was just looking on my phone at what's in there at the moment, and it's just kind of a little bit below $200,000. And it's like, bloody hell, you know, I spent months learning how to trade and invest on the financial markets. And I've done really well, doubled my pension, doubled it again, but I've never, ever done as well as, you know, from November last year up until now, never done as well as I have investing in Bitcoin. And, you know, you may be wondering, I'm going to shut up in about 30 seconds. You might be wondering, oh, have I missed the boat? Has that ship sailed? Well, Michael Saylor convinced Elon Musk to invest $1.5 billion of Tesla corporate reserves into Bitcoin, because he thinks that, you know, it costs $60,000, almost $55,000 at the moment for one Bitcoin. But he thinks that's going to go to 100,000. And he thinks at one point it'll be a coin worth $1 trillion. So it's like, you know, this is kind of mind blowing. So, I mean, he may be wrong, who can say, but I'm prepared to, you know, put 10% of my total investing pot into that and see what happens. So if I lose a lot, it's going to hurt, but it's not going to blow me out. Whereas my multimillionaire mentor, he's tweeted to say he's put most of his wealth into Bitcoin. And I'm thinking, bloody hell, you know, that's I could never be that brave. But you know, compared to other people's bravery, putting 12% in is pretty damn brave. So I hope that's helpful. Just giving you a quick snapshot of my experience.
Thank you very much, Peter. We come now to the question and answer session. So I'm keen to hear what you would like to have clarified, or something you want to contribute to the group. So who wants to start? Please feel free.
I'll start, Luca.
Okay.
I love the way you've given the context to the whole of the blockchain, the rise of blockchain technology, and the actual context of what it can enable us to do, as you know, in terms of changing the way we do business and society. However, you know, if we're looking to invest in cryptocurrency, and if blockchain is going to be worth one Bitcoin is going to be worth $1 trillion, I'm kind of thinking, where on earth do we start?
Well, it's a little bit, sorry, one Bitcoin is not going to be worth $1 trillion. All of the Bitcoin in existence are worth $1 trillion.
Ah, okay. That
so
helps.
you have to divide that. So that one Bitcoin at the moment is worth, you know, just short of $60,000. But that's the thing. Where are we going? Shall I put it into perspective for you? Bitcoin is worth $1 trillion.
Luca,
yeah.
Can I just sort of butt in a bit?
Sure.
You don't have to buy one of anything. You can buy a part of a coin. So you can invest. I've been looking at the questions coming through on the chat. You can invest any amount of money and you buy a part of a coin. And I can't remember what those parts of the coin are called, Luca.
Satoshis.
That's it. They are.
Okay. The smallest part
Thank
of a Bitcoin is traded in 8 decimal points. The smaller part of a Bitcoin is 100 millionth of a Bitcoin, which at the moment is worth like about 500-600 of a cent. Okay, so you can spend as little money as you like. If you want to start investing, you could put your pocket money into it, and you could do that. So it doesn't have to be there isn't any set amount of money to open an account or anything. You can. It's free. It's free to open an account with the centralized exchanges, and you can put as little or as much as you like. Sure, there's no barrier. There's no barrier to entry, and that's what is really so exciting about this as well. When I was saying before, let me put it into perspective. Okay, Bitcoin is worth $1 trillion. The gold that is competing against is estimated to be worth between 8 and 12 trillion. So already, if Bitcoin, and if you look at the chart of Bitcoin against gold, you see that Bitcoin is gaining on gold all the time. So if it was to take over, and you can imagine it, even part of the gold market cap at the moment has only got less than 10% of the value of gold, and the whole of Bitcoin, the whole of cryptocurrency industry is worth pretty much as Google. So it's still a tiny part. If you think about all the things they could replace, I mean, the gold is worth about 10 trillion. Cash, all the cash in the world is about 90 trillion. Bonds, they are emitted by banks and by corporations, are worth 10 times that amount. And what about derivatives? Derivatives, which are complex financial products, are worth over 1 quadrillion. Okay, if you put it into perspective, at the moment, Bitcoin has a market share of about 0.01%. So this is putting it into perspective. So when we are thinking, when people are saying this market could explode in 2021, is because it could. I mean, I'm not a financial advisor. You make your own choices and you do your due diligence. But the amount of people that are coming into this sector and the different use cases they are finding every day, not just for Bitcoin and Ethereum, but for all the other, there's over 6,000 coins in existence. All the use cases that are being found every day, they find new ways of using this stuff. And with every use they find, it becomes more valuable. So that's it. I just wanted to frame it economically. So I'm possibly thinking we are, let's say, less than 1/10 or 1% as a market share in the things that cryptocurrencies could replace.
Okay, Luca, I did get that quote from Michael Saylor slightly wrong, so I apologize for that. So I found what he actually said in his tweet to Elon Musk, the founder of Tesla. He said, if you want to do your shareholders 100 billion favor, convert the Tesla balance sheet from USD to Bitcoin. Other firms on the S&P 500 would follow your lead, and in time, it would grow to become a $1 trillion favor, is what he actually said. And as a result of tweets like that, that's Elon Musk did then put $1.5 billion into Bitcoin.
Don't you believe it, Peter? Don't you believe there was a result of that? Elon Musk is very smart, and he knows what he's doing. I think he had that. He's been accumulating Bitcoin for a lot longer than that.
Oh, you think right? So it wasn't quite those tweets that did the trick then.
I don't think. Yeah, don't read these things in the news, because I mean, please don't try to learn about cryptocurrency by reading the news, because as I was showing you at the beginning, even the people that write the article don't understand the stuff, and the way they communicate it makes you even more confused when you start reading it. So just avoid the main mass media, and if you're interested, just go on to some of the crypto information sites and read it there, because it will make a lot more sense. You can start, for example, CoinGecko and CoinMarketCap are two places where you can find lots and lots of information about all the different coins that are available. And they got links to each one's website. You can read their white papers. You can connect to the social media if they go like on Reddit and things. So with blockchain, everything is transparent. So the information is all out there. Is obviously there's many coins available, and it's a way like Peter had to study to see which shares to buy and which ones not to buy. It's the same thing in crypto. So you really have to examine each product through your filters and see which ones resonate with you. If there is one bit of advice that I could give everybody, is don't just follow the money. Okay, there are so many things, so many coins around in each area of our life. So what I will say, first of all, when you are new to crypto, go and study your sector, the one that you know. If you are into food, look into how blockchain is using crypto. If you are into financial, in the financial world, go and have a look at decentralized finance. There are so many. If you're in property, look how the blockchain is being used in property. It's so many use cases. They are unbelievable, and some of these cases will revolutionize our world. Think about property, for example. One of the main use cases would be tokenizing property. That means splitting property in so many different places and then being able to transact this bit of property on a secondary market. So you literally, in a few years' time, you might be able to go to Starbucks and buy your coffee with a bit of your house and make what is now an illiquid asset, because it's difficult to monetize property. You have to sell it, it takes months and so on, and make it liquid. All of a sudden, you can spend your property. You can buy a bit of property. You want something in Piccadilly you could never afford. Now you can buy a brick in Piccadilly. And then in 3 years' time, it would have gone up or down as together with the property prices in Piccadilly. So, sorry, the link, somebody's asking about the link. The link I was talking about, so Julie was talking about the Clubhouse link. Julie, if you share the club that we part of, the Conscious Leaders Clubs in Clubhouse, you can find us there and ask to join the club, and then you get notified with every event. But the websites that I was talking about were CoinGecko and CoinMarketCap. Those are the main ones for information about crypto. And more than that's basically their compiler of data, where you find all the coins down there and links to the information you want to find. Okay, anybody? Can
I ask a question, please, Luca?
Of course.
Sure, yeah. How does one actually determine which coins to invest in? And also, I think it's been Penny who has been talking about how risky exchanges are. Could you share some thoughts on that, please?
I don't agree that exchanges are risky at all. Not now. I prefer, it's good practice to take your coins off the exchange simply because it's safer and you have control over them. Exchanges like Binance, Kraken, or Coinbase, they got very strong security. And one of the first things that you do when you create an account, you get one of these what is called two-factor authentication, and then you download an app, and whenever you have to log in to one of these things, not only you have to put in your password, but you have to put in a code that the computer gives you. It's different for each company, and which is only works on a physical device. So somebody to get into the account has to have your password and your device, like your phone. Otherwise, they wouldn't be able to access the account. So it's fairly safe, but it's better to have them on a physical device, like a Ledger Nano X, for example, which is kind of like a USB stick, where you can store your coins safely away from the internet. Because when they are online, they could potentially be hacked, whether it's on an exchange or if it's on your wallet that sits on your computer. If you're online, somebody could get access to it. easier or less easy, depending on what you use.
I have a question.
Sorry.
Yeah, I have a question. I've always been very worried about the environment and the fact that, okay, so we've got exchanges. How long have they been in existence? Who secures them? There is no FCA that oversees them. The whole point about the exchanges that you can buy stocks and shares with, they do have oversight from the FCA. There is no one overseeing all of these exchanges. They could be ripping you off. They could disappear tomorrow and take all the wallets and that they have and all the currencies that they have. So you're fucked, basically. So that's the issue for me.
My French.
Yeah, excuse my French. Yeah, so it's the exchanges, it's the companies from which you're buying that supposedly are holding these assets for you. That's what I feel very insecure about, and I don't trust companies to have anything to do to take care of my money, other than there's some kind of external, and that's exactly why they exist, because there is no central oversight. So they always want to go into the dark space. They always want to be, away from prying eyes, away from someone holding them to account to the ethical standards. So
I think you bring many subjects to the area, and I don't think you are correct on this last one, because they are creating a new a new market. The moment there isn't regulation yet. There isn't regulation yet, but it's coming. There will be, and they will welcome it when it comes, because what it will do, it will bring them into the light and say, look, we are legit, and everything we do, we follow procedures as we do. Do you know what's happening now, Penny? Actually, some of the cryptocurrency exchanges now are getting banking licenses.
Right.
So as opposed to the banks starting to use cryptocurrencies, because it's so slow at reacting, some of the cryptocurrency exchanges are actually becoming banks.
With oversight, with guarantees from the government. Proper
banking license.
Then I would feel more safer. I mean, I used to be an investment banker. I know about derivatives. I would never invest in a derivative in my life, because I've seen what happens to them. We've seen the crash. So I know what I'm talking about, and I'm not such a I don't know, an easy prey. That's what I would say. So I would be very, very wary until you've got some kind of regulation, even if it is self-regulation, and some oversight of these companies to make sure that actually they're public companies, so you can see the finances, you can see what they're doing, that you can see the results. Private companies that are exchanges, that have your money, that have your charge of what you're doing. Nah.
A lot of people feel like you, but you don't need. That's why we're talking about. We're saying how important it is to keep hold of your cryptocurrencies in your wallet, as opposed to leaving them on the leaving them on the exchange. And you don't need to use exchanges. You don't need to use centralized. You can use decentralized exchanges, and you keep control of the whole thing. So it never leaves you. The money, it never touches a cryptocurrency exchange, but it goes from peer to peer.
So are you talking about actually using? Sorry, I'll shut up.
Hi, Luca. Hi, Luca. Sorry. Can I just make a comment here? Because what Penny is saying is very, very important. And I think this is where the problem is. And this is where we do not realize what the real problem is. In 2009, what caused the crash? What caused the crash where the society lost all their money or most of their money? And it wasn't people sitting outside of the system, it was people sitting within the system. Now, the 2009 crash was brought about by the banks, the top banks, selling profit to the UK banks and the world on a system where you could make loads of money on mortgages for people who are living in trailer trash. And they worked out a system where they could charge 4 or 5 times much as more for a mortgage by selling these people the money. The people in the UK and other areas bought into this, and they hit their targets in month 1 of the financial year. What they didn't see was that once these people stop paying, the money cycle ends. And that's where the crash happened. Now, one of the biggest banks within the US, who feed all the other banks their top people, once they've got to 30 and made their money and move into other areas, they make then money for other banks and show them how the system works. And this is what you're tying your future to. They're not helping you. They're not helping society. They're not helping companies. They are there to make money. And somewhere along the line, something has to change, that we all profit and not just them.
Well said, Brian.
I wouldn't tie my chair, my leg, my arm, or my wife or my kids or anything I own to a banking system. My wife, her her aunt married someone, and he said, keep your money away from the banking system. Don't go into a corporate account as long as you can do it, because as soon as you go into a corporate account, they start bleeding you. And Jesus said, if you're religious, keep away from the bankers. Then they're sitting in there to loan money to people. They're only there for their own greed and their avarice. And we need to move away from this system. And this is giving us an opportunity, a belief, and a reason to be able to step out of this and grow our wealth, so we all grow together. We don't have to grow as a one dog eats one dog. We can grow together. Thank you. That's all I've got to say.
Okay. I think what you were saying is relevant, although a little bit oversimplified. We were talking at the beginning, we were talking about the gold standard. And the difference is that the moment that you don't have a gold standard in the economy, it means that you can follow. If you read a little bit of the Austrian School of Economics, they describe it as a misallocation of resources due to the abandonation of the gold standard. Because it means that when, let's say that if you, in a gold standard, you either have money or you don't. And if you don't buy something if you can't afford it, if you don't have the money to pay for it. The moment that you create money out of thin air and you create credit, it means that you give a lot more people the opportunity to bid for a certain good or service. So he ends up in places where it shouldn't be. In effect, this is kind of the economic theory, very, very oversimplified. And in the end, it's an accumulation. This all started in 1971. It didn't start yesterday. It didn't start in 2005 with the subprime scandal. Is designed in the system. Every monetary system that is not based on a hard metal fails within 40 years. This is throughout history. So I believe that we are actually now coming to the point that we've had about 50% of the amount of currencies in circulation being printed in the past 2 years. And we are getting to the point of, I believe that we're getting to the point of no return. And they say, instead of being like a going back to gold, I think that cryptocurrencies may represent the new monetary system that will take the place of the system. And it's very kind of looking at it from up in the clouds, but I can see the patterns. I can see the patterns forming. And I think this is what you were saying, Brian, is perfectly right, but is a result of 40 years. They almost like 40 years to get there, and it was just the last drop. You only see the last drop when the water goes out of the cap, but you don't see all the water that was there before. Okay.
May I ask as well a question?
Sure.
Yeah. I don't. Sort of. I share a worry of Penny. but a little bit maybe different ways, because the same question is about losing money or security. What I mean is that if systems designed electronically, they are actually very vulnerable. How the there's also a question, it's as the computer system, but as well agents, really. They
okay.
are, well, yeah.
Can I answer you there?
Yeah.
This is not an electronic system. And this is the difference. It's not a centralized system, because that's the problem that you're describing. And when there are records on the on the computers of a bank or a financial company, and they have the power of altering those records, because they have the power to maintain it. It's on their system. It's a proprietary system, and all you have are numbers on your account. Okay.
But
this is the same. You have. Imagine that you had all the records of NatWest Bank on your computer, and I have the same records on my computer, and Penny has the same on her computer, and all our computers talk to each other. If there is one that is different, it gets booted out, because they think you are different from everybody else, so your records are corrupted.
So it is between our personal computers.
Sorry?
It is like communication between our personal computers.
Yes, it is, because exactly that. It's a network. Bitcoin is a network. It's a network, the same for Ethereum, the same for all the other cryptocurrencies. All these records are kept not in a sense. That's the big difference. And that's why I was repeating it so much during the presentation. It's just that all the records are not kept in a centralized place, but they kept all over the world. For example, the hottest thing in crypto at the moment are storage apps. Believe it or not, think about Dropbox, and think about Dropbox on a decentralized system. So everything, all the use cases are coming on board all the time. This wasn't even available last month, a few months ago. It's kind of like they're coming on board, they're coming with a new way of doing things. And it's just like catching on, because people think, yes, it makes sense. Why do I have to pay somebody else to do something where we can all do it together and all benefit from it? And this is it. This is, for me, is the perfect democracy. And I can see it as a way of, can you imagine that if you could vote that way? Now, when we're talking about staking, you get rewarded for taking part in governance. Okay, so you get rewarded for going to votes and voting on proposals. This is what the rewards are, not a percentage, not an interest payment. They are rewards for helping govern the system. Can you imagine if you did that and people paid you to go and vote for your local council, your MP, and if you could give your vote to, instead of giving it to one MP, you can give your economic vote to a person that you trust, let's say Richard Branson. And if you want, instead of having a sport minister, I want to give that to, I don't know, to Gary Lineker, I want him to represent me. And for these other things, that somebody else to represent me. And you got all this way of either voting on the things yourself or delegating your vote to somebody that you trust and you think is better than you. And this is it's not that far. I mean, I'm not crazy. This is not, it's not that far away. It's going to be possible in a year or two. And this could be the way that we take part in all decisions in our life.
But what about those all sorts of agents or different platforms? Is there any difference, or is it more developed, or how to choose, for example, all sorts of sellers or platforms, or someone more developed, more safe, or how to understand this phenomenon?
Just before you answer that, Luca, it's gone 9, so I'm afraid I'm going to have to go. So just want to say thanks ever so much for the session. Great to see everybody, and see you next month.
Peter.
Hi, Peter.
Thank you.
Bye. Thanks a lot.
Yes, I was saying that the top 3 that I tend to use are Binance, Kraken, and Coinbase. They're very big. They're very big. They're fairly safe. I never had any problems with them taking money in or out. And for me, they are. Yeah. And then you can look. There are hundreds of exchanges, but they are these three are very big and very trustworthy. Some exchanges are more local, like there is one that's used a lot in Korea, or others that are used in other parts of the world. But here in the UK, those are the three that I use the most. Okay, shall we take a couple more questions before we close? Because I know there are people that want to talk and have another chance. Like Zhang.
I just have a quick comment and a question for you, Luca.
Sure.
So a comment being like in terms of the risk or yeah, the risk of loss or something like that, that some of you were talking about. I actually personally experienced something, and it was not about the security or safety of exchanges or things of that nature, but I actually got into a scam last year when I was a relatively new investor and fairly naive, and you know, like, so initially I bought some Bitcoin sometime around March or April last year, and when it came close to the halving, so around a week or two before the halving in May last year, right? There was scam about, after the event, then I realized that it was a fairly classic scam in this space. But at the time when I was facing it, I was totally naive, and because of the naivety and the pressure of the seeming pressure of the halving rate, so the scammer ran some sort of impersonation scheme on YouTube, basically impersonating some celebrity and asking people who are naive like me to send them Bitcoin, and then they will like send back twice the amount. Basically, fairly classic scam, right? If you are now a little bit into the space, then you know that it is something that you shouldn't fall for. But at the time, I fell for it. So I set them totally about 0.55 to 0.6 Bitcoin, right? So now it's worth about maybe $40,000 or something like that. So I lost that amount. So that was the risk that you should probably be aware of from my experience. Okay, so that's my comment. And in terms of my question for you, Luca, so I'm not sure if this is something that you might be able to or might want to share about specifically maybe some kind of general strategies or tactics or something like that of your investing or trading or things like that in this space. Yeah. Whatever that you want to share, if you can share, that'd be great. In terms of both, in terms of everything about like Bitcoin or ETH or other altcoins and things like that. So I'm not sure if that's something that you might want to
okay,
share.
very quickly. Yes, we don't have a lot of time, but two things. One of it was the scams. There are a lot of scams in this area, so keep your eye very carefully open. In particular, if you go on YouTube, and there are lots of people, they've got lots of followers, and they have daily show or something that talk about Bitcoin. They even say themselves in the video, they're saying YouTube doesn't do any filtering. So even if the person that is speaking is completely genuine, in the comments, you might have scammers, they advertise, and they can't stop it. Physically, they can't stop it. YouTube refuses to stop it, okay, because they get paid, people to advertise. And they, time after time after time, they refuse to stop it. What Zhang was describing is something that goes on quite a lot. So be very careful. Never send any cryptos across the internet, and never give anybody your what is called a private key. Okay. In my course, I explain very well what a wallet does and what your public keys and private keys are, because it's important that you do know all these things before you part with a single penny, because you need to know, first of all, how to secure your assets. Make sure that nobody has access to them. The other thing was you're talking about investing. Which ones investing? An easy strategy I can share with everybody is to study the sectors rather than the single coins, because there's thousands of them. Have a look at the different sectors. If, for example, like the NFT sector is growing, okay, have a look at which coins are in the NFT sector and invest in some of the bigger ones. If you think that at the moment, I don't know, the online filing is booming, have a look at the company that offer that kind of service, and maybe invest in some of those. So it's easy to see. It's all. You just need to go on some of the main exchanges, and they themselves categorize coins in different sectors. So you can analyze the different sectors that are, really, really quickly. And once you find one, and you then, especially if you can use your personal experience in your normal life, in something that you know in day-to-day life, then you can realize what some of these companies do and what difference it makes to an established company. Because some of those that are around now, they're not going to be around tomorrow. The banks of today will not be the banks of tomorrow. And things are changing so quickly. Sometimes my head is spinning with all the news that I go through every day, being in this sector. It really is that quick, that fast moving. It really is. So I hope that in a way that answered your question, Zach. In case of, we're talking about you mentioned the word altcoin. Altcoins are anything but Bitcoin. All the other cryptocurrency, all the other 6,499 apart from Bitcoin. And generally, when there is what they call a bull market, when the market is going up, and at the moment we are in a cryptocurrency bull market, then the altcoins, because they're smaller, they grow at faster pace than Bitcoin. When we go the other way, when we go in a bear market, so the prices start going down, then Bitcoin holds the price better than the smaller coins. Okay, so at the moment, it might be a good idea to invest in some of the smaller coins, but they're more risky because some of these projects can go down to zero completely. They might grow by 1,000%, but you might lose everything on it. So that's a little bit of a riskier strategy. I mean, if you're new to the investing sector, I would keep to the large cap, to the big companies that dominate each sector.
Luca, you mentioned that instead of doing one-to-ones, you're not doing one-to-many. Could you give us just a few details of the courses that you run on this, please?
Yes, I'm actually putting together now a micro school in NFTS. So I'm going to be offering three different products. One is kind of similar to what we did today, but a little bit more in depth. Just going into the details of some of the concepts that we got today, which is going to be like an information of a day product. The main product is going to be like done with you, in the sense that I walk people through exactly how to do everything. So how to set up your account, how to transfer the money, how to arrange your own wallet to keep the thing safe. And then I basically give you an access to my account, so you can see exactly what I invest in, and you can copy if you want to. Now, I can give you also indication on how to build your crypto account, what percentage of your investment account should go in it, because contrary to what you hear people say, I will never put all my money in crypto. And then once everything is set up, which takes about a day, then it's a couple of hours a month. It's an ongoing thing. Basically, you just literally you put your feet up. It's a little bit. You start looking at prices on your phone, and it's a little bit addictive, if I've got to be honest. But then it just basically you have something to do only when a coin has really grown a lot and you want to take some profit, or if there are new coins that they are worth investing in, and this is the only interventions that I make, and then during the month there are different topical webinars on different. Mainly, the main product is like spending for like a day together and setting everything up, and how to set up exactly, depending on how much money you have to invest, how to set up an investment account, and how to have a spread of coins that cover all different sectors of cryptocurrency.
Okay. All right. And are you actually rolling those out yet?
It should be on Genius U in the next couple of days.
Okay.
Okay, and also there's going to be like a one-to-one. If anybody wants one-to-one mentoring, it will be available.
Thank you.
You find the only crypto the Crypto Investor Club on Genius U.
Luca, I have a question.
Yep.
What do you think of the whole NFT market? And how
Scares me.
It scares you. Okay.
It scares me because I don't know how to value it. Honestly, I don't know how to value it. So I do have some skin in the game, so we call it. I've invested in a few NFTs, but I don't invest in a single product as much because I don't know. It could be something that grows like exponentially, but it could also be a fad that at the moment is overpriced, and then it kind of bursts. Because when you think about it, an NFT, especially a collectible, like say a card or something like a football card or something like this, yes, it can be valued at a certain price today, but may not be very liquid to sell tomorrow. You might buy the Beeple artwork for 69 million. You know, to monetize, you have to find somebody that's willing to give you as much or more. So it's not kind of like a quick way of making money. I prefer investing in the platforms that make NFTs possible, and that way you basically is just like having a mini ETF of the sector. So if the sector goes well, obviously the companies that are providing the services for the sector will do well as well. But rather than the actual mine means the NFT for this celebrity or that celebrity. This is my view. Okay, as I say, I'm not a collector, so I don't really know much about the collecting industry, but I do know the different ways making for artists and musicians, and that is massive. So we'll see a lot of artists going straight to market as opposed to using intermediaries.
Interesting. Yeah. I'm asking because I think it's gonna grow really, really quick, and this year is gonna grow. For me, I just look at all the trends that I'm seeing, and I really think it's gonna really explode. But I think you're right that it's not liquid, but by definition it can't be liquid because it's meant to be unique, right? I think that's why I mean, by definition, if it's non-fungible, then the artwork needs to be unique, or anything that is NFT, then it's not a liquid market. And I think the more illiquid it is, but it's more the marketability, like the more marketable it is, then I think the better it is. So, yeah, so I'm interested because it's more of a marketability question rather than a liquidity.
It's very interesting, but you've got to be very careful as well because the standards haven't been set yet.
Yeah.
For give an example, okay, you know about the Jack Dorsey tweet.
Yeah.
That sold for 1.8 million. Basically, it was his first tweet when he established Twitter. Now, that tweet was minted on Ethereum. Okay, what stops him by doing the same tweet in ADA?
I don't think there's anything stopping it.
No, exactly, and that is the problem. So the standards haven't been set for the industry.
Yeah, yeah.
So somebody could be kind of like doing cookie cutting and saying this is the NFT, this NFT on Ethereum, but this is different because this is NFT on the Tron environment, and this one is on ADA, and this one is on Polkadot. It's the same thing. So nobody says that you can't do that. And this is kind of when I say it does scare me a little bit. I can see the growth that can be fantastic, but I don't know. It's grown about 8 times in the past 2 months, and I think when things go up so quickly, they come down as well. So I will wait for it to consolidate a little bit as a sector in general before investing in it again.
Because I minted my first NFT.
I know. I saw the tweet. I saw the message.
And I was just so surprised how easy it is to mint it, because it's literally just uploading a file and then setting the price.
I've done one as well. I've minted an NFT as well to see how it works. Yeah,
you have to share it. I might buy
it.
Cool.
Hey, guys, I think we got room for a couple more questions, and then we're already about 15 minutes late, so then we call it a night. Any more questions?
Luca, question. So
hello.
my friend, she last 2 months, she earned a lot on crypto, And she was just quickly in a few-minute conversation telling me how it went, but she didn't have time to go into details. But she did mention when she was selling it that she had a problem with her bank because they blocked her account, and then she had to go and explain that she knows what she's doing and show them that she knows what she's doing. I'm not sure how do you show that, but now she finds an alternative way to do it, which is working. But I just wondered about it. How does it work?
Okay, this you know why that is happening, because some banks are feeling very threatened. They know they could just disappear, because this is something, money can be transferred very quickly. It doesn't take a lot to empty a bank account and to put it on a crypto account. So some of the banks are making life difficult for people that want to transfer money to certain exchanges. But you just find the ones that don't have a problem. For example, in the UK, Revolut is very good. You can open a Revolut account very quickly, and you can use that to transfer in and out of the cryptocurrency exchanges. Not a problem. Some banks will not let you do it. Some others will. So just find out the ones that will. But soon, what's going to happen soon is that you'll be able to spend your cryptocurrencies everywhere. So you won't need the bank anymore, because your cryptocurrency account is going to be your main account. So the banks will become irrelevant unless they move very quickly. They will pretty much become irrelevant very quickly.
Okay. Thank you.
No problem. Oh, by the way, I want to say, any of you in the GEM community, I suppose a lot of people are, I will be interviewed by Duncan on Tuesday after the GEM. So if you want to listen some more questions, then you can listen on Tuesday as well. Okay, we have any other questions? Where's Julie? Okay, so if you don't have any more questions, then I think we can close the day here. Julie's disappeared. I think she had a closing to do with the thought for the evening. Unless she appears in the next 20 seconds, I think we're gonna have to close it here. So I thank you very much. I'll just if anybody wants to contact me, I'll just share my my contact details here. Screen. Okay. Oops, sorry. Okay, so you can contact me on LinkedIn or by email. Can't guarantee that I will respond immediately, but I will get back to you soon. Okay, so good night, everyone, and it's been a pleasure. It's been a pleasure. I hope that I haven't bored you too much. You found it interesting. But say if you have any questions or something that can help clarify for you, then I'm happy to do that. Okay.
Luca.
Okay, sorry. Let me just stop this. Okay. All right then. Good night, everyone, and see you soon. Hopefully, sometime soon we'll see each other in real life as well. Okay. Bye. Good night, everyone. Bye. Bye.